The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So joining us now to discuss the crypto markets is Joe Orsini. He's Vice President of Research at Eaglebrook Advisors. Welcome back, Joe.
Thanks for having me on. Happy holidays.
Happy holidays to you. So Bitcoin, it's now back at about $17,000. It's roughly where it was when this whole debacle happened with FTX. The same thing with ETH. So no news is good news despite rate hike concerns, correct?
Yeah, and so that's exactly what we wrote in our piece this week, is that when it comes to the unexpected, no news is good news. And so we've had a few kind of things play out since the FTX news. Of course, the BlockFi bankruptcy, that was relatively priced in, knowing that, they kind of relied on that FTX and Alameda bailout, as well as now, of course, you're having some concerns with some of the lenders. But really, it's been a slow to play out, and there hasn't been that, second wave of shock that we've seen. And so, of course, in this regard, no news is good news. And again, as we said in the weekly piece, when you look at the quarter-to-date numbers, Bitcoin down about 11.9% and ETH only down 4.1% on the quarter. That really hardly reflects the significant amount of effects, significant amount of events that occurred in November. And so, in that regard, let's see kind of how it plays out over the coming weeks, months, and naturally years. But for now, it seems as if contagion risk is a little bit isolated for now.
Now, I'm going to flip it around and ask, is no news bad news as well? Because we don't hear, granted, we have this whole idea of Goldman Sachs bottom fishing as we talked about yesterday, but it's not a significant amount of money for Goldman Sachs. It's $10 million, tens of millions of dollars, which quite frankly, I think they probably have a couple of employees together that make that. So what do you make of that? That, maybe we're not seeing any interest, none of these exciting positive headlines as well for crypto.
Yeah, so certainly crypto needs a catalyst and needs to really come out of this with some energy to really show kind of the greater community that, Bitcoin, of course, similar to the past, does have the ability to bounce. In terms of no news is good news or no news is bad news, and I think really the important thing to consider is that if the news does come and if there is real contagion, does it lead to forced selling or liquidations or stronger selling pressure? And really that's when we kind of consider the events that unfolded in early May. You had those specific days, Bitcoin down 12 to 15%. And the same thing in November. It's really all these unwinding of hedge funds, particularly, and certainly some panic as well. But at this point, when we kind of looked at, for example, Bitcoin's realized profits and losses as a percentage of total market cap, that really hit a historically large level again in November at 5.3%. And so historic lows in the past are around those capitulatory levels. And again, just as we said earlier, there does need to be a positive catalyst. But maybe a positive catalyst is just no more negative news.
All right. So Bloomberg is also reporting that hedge fund Furtree is suing crypto investment firm Grayscale to obtain details about its flagship Grayscale Bitcoin Trust known as GBTC in order to investigate potential mismanagement. And a Grayscale spokesperson has told CoinDesk in part, quote, "We respect the views of our shareholders and appreciate engaging directly with them on the details of our product structures and operating models." Now, Grayscale and CoinDesk are both owned by Digital Currency Group. Now, GBTC is selling at close to a record 43% discount to the price of the underlying Bitcoin in the trust. What kind of impact on the markets do you foresee from these events?
Yeah, so of course the Grayscale discount is certainly an unfortunate situation, one that really has been the situation really since the peak in 2021 and kind of flipped over. And of course, that's why it's significantly underperformed spot. We've received a lot of questions on Grayscale and GBTC, but, working for Eaglebrook, we are an SMA provider where our clients own the underlying holdings in the spot situation. And so we don't really advise on the Grayscale GBTC. Now, the situation broadly, of course, does show some, interest or lack thereof of course, kind of tightening up that discount. And what we always say with these spot ETFs is that the reason they're being denied is been the same reasons for years on end. And it's really that surveillance sharing agreement with a regulated market of significant size. And of course, that kind of requirement that the SEC requires really hasn't been able to come out and play. And so, we believe a spot ETF will come eventually. And of course, the tide lifts all boats, and it would certainly open up a lot of access to some of those players that just want to utilize the ETF in an easy capacity. But it doesn't seem like it's a near-term catalyst, and certainly a situation that is worth monitoring for those that own GBTC.
You also say that much of Bitcoin and Ether's annual fall can be attributed to a few event-driven declines. What are your expectations in the long run?
Yeah, so I think there's going to be a little bit of restoring of confidence and trust that needs to occur with, in order to, I guess, garner new fiat into the system. Now, what we say is that price does have a knack for changing sentiment. And so as you see price now at these 17,000 levels, it's still below that 2017 and 2018 peak, which to us is very interesting. But, Bitcoin and Ether and digital assets broadly are, often a FOMO-driven market, unfortunately. And it's similar to equities, but it's, specifically in digital assets, when things are on sale, people want them less. And so we're fighting to try to fix that. We do believe in the long run, the 3 to 5, of course, and the 10-year, that these event-driven declines, of course, have very little meaning to underlying technology. Money is evolving. Money is becoming more digital. Bitcoin for itself has these specific characteristics that make it a really attractive form of money, and potentially to take market share away from fiat. And of course, with Ethereum, the ability to automate transactions and the equality of entrepreneurs that are entering into that Ethereum ecosystem. I mean, this is not really changing, and these events don't really change the long-term thesis of those. And so those are the conversations that we're trying to have, and really pushing that, because at the end of the day, I mean, cycles happen. And so we've been in a bear market for about 13 months now. And but those really are where the opportunities lie. And as we've seen in the past, opportunities present themselves, especially for long-term investors.